Today's YouTube News Roundup covers the latest stories in the fast-changing world of crypto. Solana co-founder Anatoly Yakovenko sounded the alarm on Bitcoin's vulnerability to quantum computing breakthroughs, warning urgent algorithm migration is needed as the odds of quantum disruption rise. He emphasized that existing cryptographic standards, particularly those powering Bitcoin transactions, could be rendered obsolete if Shor's algorithm becomes practical in the next 5 years. Google's advancements in quantum hardware are already narrowing the timeline, forcing Bitcoin developers to speed up work on quantum-resistant solutions. Meanwhile, BlackRock has rapidly entrenched itself as Asia's top player in crypto finance, earning over $260 million in annual revenue from its Bitcoin and Ethereum ETFs, which dominate US market inflows. BlackRock's iShares Bitcoin Trust became the largest crypto ETF globally and saw nearly 3/4 of all US BTC ETF flows, while its Ethereum ETF captured most US ETH ETF flows following launch. Another major headline: Bitcoin's illiquid supply has hit a record 14.3 million BTC, or more than 72% of the circulating supply, pointing toward strong holder conviction and a possibly impending supply shock. Asset manager Fidelity notes the scarcity, paired with rising demand and a shrinking new issuance schedule, push Bitcoin to new all-time highs and could continue to drive upward price momentum. According to Fidelity's projections, entities holding long-term and company-controlled BTC could own 6 million Bitcoin by the end of 2025, making up over a quarter of the total supply. Major players like Michael Saylor's strategy alone hold 638,985 BTC and haven't sold since beginning accumulation in 2020, reinforcing the narrative of increasing illiquidity. Fidelity also warns that sudden sell-offs may occur as holders realize gains, as seen when 80,000 dormant BTC were sold in July 2025, a possible early sign of capitulation. At the time of this broadcast, Bitcoin trades around $115,600, with recent price movements showing heightened volatility. Regulatory policy is following suit. The US Congress has set a 90-day deadline for the Treasury to present a comprehensive plan for a strategic Bitcoin reserve and a custodial framework under Bill H.R. 5166. The Treasury has been tasked with addressing technical custody requirements, balance sheet treatment, cybersecurity, third-party custodians, and the government's forfeiture fund in this report. Currently, the US Marshal Service holds about 29,000 BTC, but government-controlled funds may total close to 198,000 BTC when accounting for agency holdings nationwide, with new minor issuance post-halving at roughly 40,500 BTC over 90 days, and spot ETF net inflows hitting 20,000 BTC, policy choices could notably shift Bitcoin's available supply. Congress is weighing options, from holding and buying to lending Bitcoin, each affecting market volatility and the free float differently. Policy modeling indicates that consolidating, lending, or locking up these government holdings could outweigh new market issuance, influencing order book depth and ETF dynamics. Other countries, including Germany and El Salvador, have adopted divergent strategies for managing and storing digital assets, providing international contrast for US policymakers. The US Marshal Service currently relies on Coinbase Prime for custody, but new rules require reviewing and surveying other custody and security practices. Ultimately, effective US government policies on Bitcoin reserves and ETFs could either increase market volatility by reducing free float or help stabilize the market by supporting exchange liquidity. This period of study and planning heralds potentially significant changes for American digital asset policy and could mark a pivotal moment in US crypto regulation. Stay with us as we track these urgent developments in cryptography, institutional crypto adoption, on-chain metrics, and policy. Do you think governments or tech breakthroughs will shape Bitcoin's next era the most? Let us know your thoughts in the comments, subscribe for daily deep dives, and share this roundup if you found it insightful.